What are the key challenges facing income-seeking investors?
Geopolitical frictions and trade tensions are now drivers for global markets. This uncertainty is affecting investor confidence and reinforces our view to use bonds to strengthen portfolio resilience. At the same time, coordinated policy easing across major central banks has led to bond yields moving lower across the board. This poses a challenge for investors who are seeking to invest in assets that can provide an attractive yield.
Why should investors consider the BGF Asian Tiger Bond Fund?
For investors seeking diversification away from the Singapore dollar bond market, US dollar bonds are a first step. The BGF Asian Tiger Bond Fund invests predominantly in US dollar bonds issued by Asian issuers. The portfolio is predominantly investment grade, but the portfolio's yield is enhanced through high-yield bonds. Strong fundamentals in Asia mean that the portfolio's volatility is lower than strategies that focus solely on emerging markets. Company fundamentals continue to trend positively with the leveraging and default rates contained. Active management is key in this market as it allows us to position the portfolio for a variety of market environments. We can effectively balance between yield and risk to build a portfolio that generates attractive risk-adjusted returns over the long run.
Beside Asian USD bonds, which other bond markets can investors consider for greater diversification within their portfolios?
Investors can turn to the renminbi bond market. This market has been growing rapidly, and increasing ease of market access has led to the gradual inclusion of certain sectors in global fixed income indices. Currently, less than 3% of renminbi bonds are owned by foreign investors. However, as more sectors in the renminbi bond market get included in global indices, we believe that this will influence how investors look for income globally. The correlation between the US dollar Chinese credit market and the renminbi bond market is very low. This increases diversification, and we believe that there is alpha to be made through asset allocation. We take advantage of this in the BGF China Bond Fund, which has the flexibility to allocate as needed to capture the yield differentials and dislocations between both markets while keeping currency risk minimal.
What makes BlackRock successful in investing in Asian fixed income?
The BlackRock Asian Fixed Income and Credit team invests across the credit and liquidity spectrum in both traditional liquid strategies and private markets. This gives us information advantages in each market that we cover. We are well resourced with 30 investment professionals across Singapore, China, India, and Australia, with an average of 13 years of experience. The team is supported by 10 dedicated Asian fixed income and credit traders and other investment professionals focusing on capital market access and risk management. Bond markets in Asia are expected to grow rapidly, with Asia still the growth engine of the world. We remain committed to continually enhance our team and platform in order to deliver strong outcomes for our clients.